everybody to the opening session here today in Auditorium 2. We have an exciting lineup of companies to provide us with a short 15-minute snapshot into their unique stories over the coming hour. So without further ado, to kick off the opening session is Corey Bierlich, Executive VP and CEO of CanAlaska Uranium. CanAlaska is a junior explorer primarily focused on uranium discoveries in the Athabasca Basin in Canada. In addition to its uranium portfolio, CanAlaska also has an exciting base metal portfolio, particularly with nickel assets in the neighbouring province of Manitoba in the Thompson Nickel Belt, one of the most prolific belts for nickel sulfide discoveries globally. It's an exciting story, so please welcome Corey to tell us more.
Well, thank you for the kind introduction. And yeah, 9 o'clock draw is always a hard one on second day. So this is good to be here to tell the CanAlaska story. We've got an exciting project underway at our West McArthur joint venture with Cameco. We've got a brand new discovery, and let's focus on that today. But I really want to get this started, and it's about investing in carbon-free energy, clean energy. And I have an example here of uranium oxide fuel volumetrically. It would be 3 kilograms of that fuel. This is 1 million kilowatt hours of energy I can hold in my hand if that was the fuel. This would run the average Canadian home, all its needs for 100 years. That's the amount of waste you generate. So this is why we need more uranium, more nuclear energy in the world to meet the goals of 2050. I'm gonna make some forward-looking statements, and I usually open with this one. We felt in 2021, we were on the cusp of major discoveries within our portfolio. We came out of a very successful year of exploration on Waterbury South project, where we had a new discovery near Cigar Lake. We came out of our West McArthur program with our joint venture in Cameco, and had additional mineralization up to 8% grade at that project. And then we followed it up with new discoveries of mineralized zones at our Moon Lake South joint venture, the very first drilling program with our partner Denison Mines. So we had a great 2021. In 2022, we announced a brand new discovery at West McArthur, what we're calling the Pike Zone. We drilled in our very first hole on a 15-kilometer trend, 9-meter intersection, 2.4% uranium with some higher grades in it. This is a very significant discovery. We followed it up with several other holes, and we drilled up to 25% uranium grade. This is exactly what you want to see for one of these new discoveries in the Eastern Athabasca Basin around all that critical milling infrastructure. We're a well-structured company. We're designed for success in a good market. We've only got 123 million shares outstanding for a company of our vintage. That's very, very good. 173 million fully diluted. Management's well involved with this company. Well invested with our shareholders, and importantly, we've got $14 million in the bank as of 2 weeks ago. So we've got lots of capital to deploy in 2023, and that means a lot of news for our shareholders as we drill on multiple discoveries. And the price of uranium has been stable at $50 US a pound for some time now. I'm going to articulate why this needs to change to incentivize further production moving forward. We're technically and politically strong at the board and management level. We're led by Ambassador Thomas Graham Jr. out of the US. For context, he worked on all the non-proliferation agreements with the US and Russia over the course of 4 US presidencies. So he's very knowledgeable in this space. He's a firm believer in the nuclear world, and he's a good leader for us. Myself, 25 years with Cameco prior to joining CanAlaska 4 years ago. And I brought with me just a couple years ago, Mr. Nathan Bridge as my VP. Again, over 10 years of experience with Cameco. We're designed for success. We know what we're looking for. Over 140 years of Athabasca uranium experience and multiple discoveries on this team. So we are an active explorer and project generator focusing in Eastern Athabasca, mainly on uranium. As I mentioned, we're into copper and nickel as well, but I'm going to focus on uranium today. And we really pride ourselves on minimizing shareholder dilution. So bringing in deals that bring outside investment into our portfolio. We can't do it all. And really geared towards capital gains for our shareholders, ultimately through discovery, the very front end of the value chain in terms of finding a mineable asset. So it's all driven towards discovery. The business case for uranium really has never been better. I've been in this for 30 years. New builds continue to occur around the world, and there's projections that if you want to meet the goals of 2050 as a clean energy world, you've got to triple your nuclear capacity. In fact, last fall I heard of the WNA in London back in September, you may actually have to quadruple the current nuclear fleet to achieve those goals. That's just unbelievable conversations happening about what needs to change in order to get to a clean air world. Part of this solution is going to be small modular reactors, no doubt. 2 years ago, this was considered fantasy. Now it's actually reality. In Canada, just as examples, on the left, we have the Westinghouse eVinci microreactor, 5 megawatts of energy going into Saskatoon, a community of 300,000 people where I'm from, to add clean electricity to that grid. Just amazing, amazing technology. It's the size of a large van. 5 megawatts of clean energy. In Ontario, the Darlington facility is putting in 300 megawatts of new SMR build out, going to supply clean energy for 300,000 additional homes. This is no longer fantasy. This is reality. This is just an example from Canada. This is going to happen on a global scale. And what does that really mean? You need more uranium. You need to find more uranium. And this is where CanAlaska comes in. This year, we've got an incredible outline of work ongoing. Drilling programs at West McArthur currently ongoing. We've also just wrapped up our key extension project. We're in our very first drilling program. Very first drill holes anywhere in the project intersected very, very weak mineralization, but good indicators of what may be to come. Moon Lake South joint venture, currently drilling on that with our partner Denison. So we've got a lot going on in Q1 into Q2 this year. Moving into the summer, we'll be back at West McArthur, moving along the Pike Zone, and also starting up a new project with our new partner Basin Energy on one of our other uranium properties that they're earning into. So we're geared for success. We've got a great year ahead of us. It's a large portfolio. On the left is the Athabasca Basin. We have over 300,000 hectares of land. Again, multiple discoveries within that portfolio. I'm not going to spend a lot of time on the nickel space. When no one wanted to have this conversation about uranium post Fukushima, we moved into nickel because you're going to have to deliver that clean energy to batteries to deliver it to the end user. So we are geared for that clean energy metal need. So our portfolio in the uranium space spans all the possible target potential, from shallow targets like at our key extension project through mid-depth, closer to Cigar Lake, or even deeper like McArthur River at our West McArthur project. These deeper sandstone areas are not a problem for us. With our Cameco and Orano backgrounds, we can use these large alteration halos that come with these deposits to an advantage to make discoveries. And that's exactly what we've been doing along the C10 uranium corridor. On the left is our 42 zone alteration halo above that 8% mineralization, to scale roughly with Cigar Lake on the right. We've got a major mineralizing event on the go here. We've got to find out where that main mineralization is happening. So this is really encouraging to us. So encouraging that we spent a lot of money going out and doing geophysics to retarget West McArthur. And what that did was it provided new locations for potential discovery. And our very first drill hole on C10 South corridor in this area drilled that 9-meter intersection, 2.4% uranium. It's completely wide open. It is world-class. And just for context, on the right is McArthur River, the world's richest uranium deposit. 750 million pounds of uranium at a grade north of 10% is right there. All that critical mine and mill infrastructure present within the range of our project. And again, our joint venture partner is Cameco here. So we are on a great trend. This is a new and significant discovery. It's located importantly below the unconformity, 100 meters. Here it is on the left. This is a good example of one of these basement-hosted Tier 1 type targets in the Eastern Athabasca Basin. My time at Eagle Point for 5 years as chief geologist, the photo I took on the right here was from 400 meters below that unconformity. This is an ore grade vein. It's roughly half a meter wide. Just to put this into context, this highest grade portion of this 9-meter intercept, if I put it back together, it'd be 6 meters long, would be represented by that yellow line. This is why we're excited. This is a world-class intersection against one of the world-class deposits in the Athabasca Basin owned by Cameco. So this looks right. It smells right. And when I say it smells right, is that the geologists call me and say the core smells. It's stinking up the core shack. It smells like steamed Brussels sprouts. That's an indication that you're very close to the mineralizing event with these high grades. So importantly, we trace the fault now as controlling the nearby Fox Lake deposit, 70 million pounds at 8% of Cameco and Oranos, through our 42 zone now into the area of Pike Zone, where we have this new basement mineralization. We historically thought the fault traveled to the north. It's actually going to the south. So this is a great realization for us and one that we can use for future targeting. If we take this intersection, we look at, okay, let's put it up against McArthur River. Let's put it up against Eagle Point or Millennium, these big basement deposits or unconformity related deposits. This is what each of these look like 100 meters below that unconformity. This is encouraging. We need to follow it up at the unconformity and along strike to see what it's doing. So we did that late last year, and this is where we drilled the 25% uranium. As we approach that unconformity target, moving up towards that ideal space shown on the right, we're drilling 25% uranium. This is what it looks like. That shiny black, that's uraninite steel. That is incredibly dense, incredibly high grade mineralization. This is very, very hard to achieve in any environment, but it happens often in the Eastern Athabasca, and this is exactly why we think this is important, a very important discovery for us. So we're currently working on that unconformity target area. We're looking in the basement as well, trying to track out where this mineralization is going, where we need to be along these trends. These deposits occur along several kilometers generally, like McArthur River, several pods along that trend. So we need to work hard to figure out where we need to go and where we need to look for that highest grade mineralization. So again, that's ongoing. Our other project this winter, which we just wrapped up, was our Key Extension project. This is 10 kilometers away from the Key Lake Mill. Historically produced 150 million pounds of uranium from the Gartner and Dealman deposits, just 10 kilometers away. We have that fault on our project area. We ran geophysics. We came up with 3 incredible anomalies that look correct geologically, shown here in blue, highlighted by the black circles. These are the right size and right scale. You can fit an Eagle Point or an Arrow deposit in here. 350 million pound basement host mineralization of NextGens would fit in these anomalies. So we're really encouraged by that. We went out and drilled it this winter, and we intersected weak radioactivity, elevated radioactivity, right in one of these blue target areas. So that's very encouraging. The first ever drill holes on this project have come back with very weak mineralization. That's a very encouraging sign that we're on the right path. And importantly, we've opened up new exploration space by identifying additional fault, which we didn't know was existing. So again, Key Extension is becoming important for us moving forward. It's again around all that critical mine and mill infrastructure. And why is that important? Well, imagine a world where there's no uranium production coming from the Eastern Athabasca Basin. Now, that sounds a bit strange. Reality is, the Rabbit Lake Mill is offline. The McLean Lake Mill, taking Cigar Lake ore, could be offline in 6 years when Cigar Lake Phase 1 is done. That's the only economic piece of Cigar Lake. McArthur River is just restarting. When it restarts, it's got 15 years of mine life left. 15 years. If we found it today, it would take it 15 years to get it into production. We're not going to take it to production. We're the discovery piece. Get it into the hands of our partner Cameco. Perhaps it goes to the Key Lake Mill. So there is a need in the Eastern Athabasca to find a tier 1 uranium deposit to feed all of this critical infrastructure. Just imagine what that's going to do to the market when that uranium comes offline. It's a big portfolio. We can't do it all. We bring in partnerships. Recently, a $15 million deal with Basin Energy, a newly listed ASX company. We're going to get out here exploring. We're doing the work for them. We're going to operate it for them. It's an indication of our project generation business, where we go out, generate ideas, generate projects. We bring outside investment in to help move these projects forward and de-risk them. Again, we can't do it all, but these turn into great partnerships, and we can focus on the projects that we want to focus on. We've got a part 2. I talked about the end use, the nickel, where you deliver that clean energy in and it gets delivered to the end user. Well, the nickel story is real. I mean, there's a supply deficit, there's a growing demand. We've got a world-class nickel portfolio in the neighboring province of Manitoba. No one wanted to have the conversation around uranium for 10 plus years. We went out and said, let's look for nickel. This is the 5th largest sulfide nickel belt on the planet. It was being ignored completely. The land was coming open. We project generated. We just spent, or our partner just spent down our Manor Bridge project, $4 million evaluating that. Nearly every single drill hole drilled high-grade nickel mineralization. Again, this is a nickel-rich district. It's a large-scale project portfolio. It really is going to attract some attention when we can get it moving. So what are we doing to augment that nickel? We went out and bought a nickel deposit. Again, adjacent to our portfolio. We got an opportunity here to go buy this relatively cheap. It's 82 million pounds of nickel in the ground, National 43101 resource. So this is a real deposit. It's $1 billion in contained nickel value, and it has room to grow. Importantly, it's part of our project portfolio now, so we can monetize it for our shareholders moving forward to get it out of the nickel space, or out of the uranium space, sorry, and into the nickel space by itself. So stay tuned for more coming out of our nickel projects. So we believe CanAlaska ticks all the boxes, project generation, bringing in partnerships, doing deals, importantly, making discoveries, and I say multiple discoveries. It's just an incredible portfolio, an incredible set of results we've had in the last 2 years, and we're advancing those new discoveries today. So expect a lot of news flow in 2023 on those discoveries out of CanAlaska. And if we're successful, we're on to a new tier 1 uranium deposit, and that's what the world needs: clean energy fuel. So thanks again for your attention. We're drilling on new discoveries, and please follow the CanAlaska story. It's a great one that's unfolding. Thank you.
Anybody got any questions for Corey? at all? Now, just one thing, Corey. Canada's the second largest producer of uranium, but it's majority exported. Are you seeing any encouragement from the government to move towards downstream refining? I mean, we're seeing it in the nickel space, and we're seeing it in the lithium space, but are you seeing any of that occur in the uranium space?
Yeah, well, there is a lot of conversion and refining done in Canada already through Cameco and its eastern operations. So most of the ore or yellow cake that comes out of these mines in the Athabasca already go to Ontario, get converted into fuel, and then end up essentially down in the U.S. utilities for large part. So so that's already existing. But I think what we need is more of that capacity in North America, because 40% of the enrichment and conversion capacity sits in Russia. And we know that's a geopolitical problem. So I think there's a lot of talk with the Department of Energy in the US, along with the Canadian government, to increase that aspect of it. And obviously you've seen Cameco recently invest in Westinghouse for small modular reactors in particular, but it's also to supply fuel and manage that fuel for utilities and repairs and things like that. So, you know, I think that's all going to come back to North America in some fashion. So yes, there's absolute support there. So thank you.
Thank you. Thanks, Corey. Oh, we've got another one. Sorry, we've got another question, Corey. Sorry.
Oh, hi, my name is Michael. Hello. No, my question is, I mean, running your company in a democracy like Canada, could there also be a little bit more of a problem that you might not have like in the country of Kazakhstan or in an authoritarian government where, because excuse my ignorance, but I was actually reading that because Cameco was in Canada, there was no company specific risk because it was run out of a democracy. Can you share some views on that?
If I'm understanding the question correctly, you know, I think Canada is the safest jurisdiction in which to operate. So, you know, Kazakhstan, I think, does have some challenges in front of it. They're having some challenge getting the fuel out or the product out, because it used to go through St. Petersburg, again, Russia. China is, of course, becoming somewhat of a topic of concern more lately. And so they're having some issues. So I think the Kazakh production could be at risk at some point in the future. So it makes this all that more important not to let the Eastern Athabasca milling operations go offline. And that means you got to go out and make new discoveries. The alternative is you could bring tier 2 type production online, but that means your price of uranium is not $50 a pound. It's going to be forward sold into something closer to $100 a pound. And that just resets that bar. And that will bring all of us along, especially those with discoveries. So it's a great time to be in the nuclear space, in particular in the discovery space. Thank you.
Thanks, Corey. Next up, we've got Aldo Boitono, Chief Executive Officer of CleanTech Lithium. CleanTech Lithium is an exploration and development company advancing the next generation of sustainable lithium projects in Chile. It aims to utilize its proven direct lithium extraction technology to produce some of the greenest battery-grade lithium for the rapidly growing EV industry. It's a relatively new player in the lithium industry, but has made waves since listing on the AIM in 2022, and is a lithium story to keep a very close eye on over the next 12 months. A little fun fact about Aldo is that he's an avid mountain climber, having climbed the K2 mountain, which is over 8,600 meters above sea level. And please welcome Aldo to tell us more about CleanTech.
Okay, thank you. Thank you so much. Where does this? Sorry, right? How you? We'll start showing our vision. You mentioned mountain climbing. When I first approached this area back in 2017, I saw no conflict in developing a lithium exploitation company. It's now a junior listed in AIM, as you explained. And the fact that we could preserve these mountains and this pristine environment at 4,400 meters. I'll start with a short video, 2 minutes only, to explain who are we, what are we doing, and at the same time show you, it's better than slides, show you in graphics the place and the extension of these basins. We are the only lithium company that controls 2 entire basins in the lithium triangle.
aquifer, so there is no water depletion from the aquifer.
CleanTech is utilizing a sustainable technology called direct lithium extraction, or DLE. The wells to the aquifer will leave a barely discernible footprint on the landscape. The brine is pumped to a processing plant where the lithium is extracted using resins. The processed brine is then pumped back into the aquifer. The technology partner for CleanTech is Sun Resin, which has nearly a decade of experience with this process and is seen as the world leader.
这块就说这个工艺的话，其实在国内的话已经非常成熟这样的。然后就说，我们的话就是光蓝小的话，我们大概已经签了10个商业化项目。然后就说现在的话，大概是总共合计的一个产能的话是73000吨这样的。然后我们来看的话 ，CleanTech 项目的话，因为它水电条件是比较好的这样的，说我们怕可以在比如在一些西藏呀这块使用的话，其实没有任何问题这样的呀。
Este proceso no contamina, es imposible.
Keep going. So this is the main figures for our company. Again, we listed our name at a raise of 4 million pounds pre-IPO. Prior to that, got an award of the best IPO of 2022, basically because we listed it just when the Ukrainian-Russian war started. Our two co-brokers, Daniel Fox Davis is here, and Canaccord, our two joint brokers. They Canaccord declared us the top pick of 2023 for the junior EV metal space. Forbes declared us on June 13th as one of the top lithium stocks to watch in the world, along with Atlantic Lithium, Mallee, and Piedmont. Mining.com also recognized our value as a company. We're going to a dual listing process in Australia that will be finished around July, and that this is part of the starting of that campaign, reaching out to Australian and Southeast Asian markets and investors. Regal Funds is our largest fund and largest shareholder. It's the largest mining fund in Australia. You can see the market cap and all the things we've done. Again, we talked at the video 2 strategic projects. We're the third one since then, a greenfield project. I'll be part of the work we're doing. We're drilling in 3 simultaneous places. Again, the resources are up to 2 million. Our analysts tell that will go up double the size in the 2 more developed projects. We have a scoping study on the most advanced one called Laguna Verde. The scoping study on Francisco Basin, the similar grade and similar chemistry and similar project will follow up 2-3 months from now. We'll be finished the scoping study, and we already started the PFS with Laguna Verde. Again, wholly owned license, no competing projects, 4,400 meters, not significant flora or fauna, even though we're done the already based lines on these projects. And the indigenous communities who we work with are 2,000 meters below, 2 hours away. And we talked about the board. Steve Kessler, who is our chairman, now is executive chairman, has developed the largest 2 copper mines of the world, all the way from constructing into financing and production. Escondida and Coyahuasi, both copper mines in Chile, and a lot of experience on field, a lot of women too. Half of our workforce is women, and not because by a choice, but because we've been hiring the best. My background is a civil industrial engineering. I have also a master's degree and a doctoral degree in the US, and this is on renewable energies. I developed, constructed, and then, developed and then sold to construct 3 large projects accounting for 800 megawatts of energy on solar energy. That's where it will come in the following months, by resource upgrade on the 2 projects, Laguna Verde and Francisco Basin, who are both of them account for 2 million tons of resource, 800,000 of them indicated and measured. We already have produced 1 kilo of battery grade lithium with a certified in Germany NASA plant with direct lithium extraction technology, and it had less impurities than the similar grade lithium carbonate. We have commissioned a plant that will be operating in July, produce 1 ton of lithium per month with direct lithium extraction. We already have a small unit is being tested in preparation of the larger plant that will be operating in July. We aim to be the cleanest lithium producer of the world with a small footprint of direct lithium extraction, plus they use 100% of renewable energy. The infrastructure is there. You saw the power lines on the video. We have access to water. We have access to roads. There's even cell phone coverage at 4,400 meters because this is a gold district and Chile is best in the world, one of the best 3 jurisdictions in mining, along with Canada and along with Australia. We don't have any strategic partner on purpose. We're the only lithium listed company that has any offtake agreement. We want to de-risk the project, make it larger, make it bigger, and have a higher value. And at the stage that we finish the PFS, at least with one of the projects, Laguna Verde, that PFS started a month ago with Worley, and then will the time to engage. That doesn't mean we haven't been visited by large Japanese household battery producers from Australia, and from China, also from companies who manufacture cars. You can guess who have been visiting on site and have access to our information. The projects, again, Laguna Verde, we drilled 4 holes on the previous season. And now we're drilling two, and at the same time, we're doing a lot of hydrogeological work. The only way you can re-inject the spent brine is when you control the full basin. And again, we are the ones who do. Those are the grades that have come out. That's the scoping study, the net present value, the return, and both resources sustain 30 years of production at 20,000 tons per year. Francisco Basin, similar than Laguna Verde. We drilled 1 hole that accounted for 500,000 tons of resource inferred, and now we're wrapping up with 3 more holes being done there that will raise significantly the resource. Again, scoping study underway, soon to be finished, then followed by a PFS. Already have the environmental baselines done, and a hydrological work is going underway. This could be a game changer for us. This is a huge salar. We control the southern basin of it. It sits at 1,000 meters, much norther than our 2 properties, close to Salar de Atacama, but at a lower elevation. We have an extensive license, 344 square kilometers. We already started the drilling campaign. We're doing the roads and access to start drilling. You can see the magenta color that signifies a high conductivity or low resistivity. They're equivalent, and that means there's brine down there and there's lithium on the surface. We're going to do 1 whole campaign, 540 meters deep, reach to that brine, and if that works out, we'll expand and do a full drilling campaign. We can do it year round at the elevation that we're working. Again, actually, infrastructure, the Pan American Highway with 2 lines each goes through this as a big and close solar plants, etc. We've said a lot about environmentally committed. DLE, again, you recover 95% of the lithium at the resin level. You follow with other things that are known in the market. Our chairman has a doctoral degree in hydrometallurgy. He founded Pan American European Lithium in Europe and ran the largest ionic exchange plant at one time in a uranium deposit in Namibia. So you basically extract the brine, re-inject it without the lithium. Then the lithium goes to the process of enrichment. The water consumption is very, very low. And we need to compensate the net use of solar with energy. And we have it next door with renewable energy access to energy. This is part of the work we've done with Sun Resin and the plant being built in Argentina. Those are the plants in China. Tell you about Chile, my home country. There's been a lot of good news coming up. There's an announcement soon to be happen. We've ticked all the boxes on community work, on water usage, energy, and direct lithium extraction. The country already announced that the only path forward for future projects is direct lithium extraction. We're one of the most, if not the most advanced companies in the world doing pilot plant of significant size on it, and it will always well received by the authorities. We also have a strong work at the community level, at the local government level, with local geologists, the university, and so on. This is the path to production. We aim to be in production in 2026. Again, you'll see a lot of news coming out. And this is the path of Laguna Verde. Francisco Basin is following shortly, and Yamara will follow afterwards. We have a known name of putting the money on the ground, the money to work. And we've been rewarded the name. The stock has risen. But now we are looking to ASX to do a listing process. This is all the summaries of us. I don't know if anybody has any question. And thanks for your time.
I've got a question, Aldo. So Chile's part of the free trade agreement. It's a free trade country. Are you seeing any inbound interest from North America, particularly given the Inflation Reduction Act?
Yeah, we are the only, thanks for the question. We're the only country who produces lithium and has a free trade agreement with the US. You know, the Inflation Reduction Act requires that 50% of the lithium of the future batteries comes from the US or from countries with a free trade agreement. We're part of the Chamber of Commerce of Chile and the US, along with Australia, Canada, and Germany and England. And we've been talking to the embassy and the consulate, and there's groups of from the government of the US coming to Chile, and we're planning visit to site and interacting with them. That's true also for Europe, who's following, and the UK, who's following the lead of the US. The ambassador of Chile in the US said that despite the good ties and the good work we have with China as a country, along with the US, is the two more significant countries that we trade off. We're really looking forward to supply lithium to the Western world. So that's the plan on Chile, and that's announcement. It will should have happened this week. The government is delaying it a little bit, but it will announce a significant shift of moving production of lithium in Chile in a new way. Not only Salar de Atacama, who produces most of the lithium in the world, is the largest reserves and everything, but other players like us. And the path forward is what we do: clean tech lithium with the technology community and the work on the field. Okay, thank you so much. Good luck with the conference.
Thanks for that, Aldo. Next up, we have Bruce Lane, Executive Director of GTI Energy. GTI Energy is focused on defining and developing in situ recovery uranium projects in, is he here? Oh, sorry. Wyoming, project in Wyoming in the United States. The United States is one of the largest nuclear power jurisdictions globally, with nearly 100 commercial nuclear power reactors. So this ideally positions GTI Energy to help fuel the transition towards essential clean energy as countries like the US strive to achieve a net zero future. So please welcome Bruce to tell us more.
Well, thanks everyone for turning up to hear about GTI Energy. I've just given you another 2.5 minutes. You don't have to listen to me, so you may appreciate that by the end. Look, as it's probably pretty clear from the movie, we're in the uranium business, and we are on a journey to define ISR amenable economic uranium resources in the US. There probably will be a couple of forward-looking statements in the presentation, so hence the disclaimer. Look, we're very focused on the US. The US, I think, as was said in the introduction, is the largest market for uranium in the world. US utilities purchase 50 million pounds a year. Wyoming is in the US the leading uranium state and the home of ISR, so we think that is the best place to be exploring for and developing uranium projects. And the good news is that we've discovered some ISR amenable resources. And in fact, yesterday we published our maiden resource statement. So just a little bit more about the US before I jump into the company details. 95 gigawatts a year of nuclear power and 92, 94 reactors, depending on how you count them. And I think the pivotal thing about the US is there's been a renewed recognition of how important nuclear power is to them going forward, and it's well published, well documented. But the issue for them is, for the US, is there's only 5%, well, according to this chart, 5% comes from domestic supply. And in fact, I think it's probably been less than that. So 50% of their clean energy, 20% of baseload power, and pretty much all of the fuel has come from offshore. And that's without talking about the enrichment and conversion services that come out of Rosatom and the like. So they've got a strategic issue, and there's a renewed determination to change that and to bring the domestic nuclear power and uranium mining and uranium conversion and enrichment facilities back on shore, and get the US to be a leader in nuclear power throughout the value chain going forward. And this chart just highlights the collapse in uranium mining in the US. And so that's been driven by a number of factors. Obviously, the price of uranium has been low. The Kazakhs were pumping out cheap uranium. We had the megatons to megawatts program for reprocessing nuclear warheads out of the Soviet Union. And of course, we had things like Fukushima, where that caused a lot of countries to shut down their reactors and get out of the nuclear power business. And of course, all of that has changed. And in the last couple of years, that change has been very, very dramatic as a response to climate change and a drive to reduce emissions. There is a cacophony of positive news. I'm not going to go through all this, but you spend half an hour on the internet, have a look at a few Twitter feeds, you'll see that the absolute avalanche of positive news around nuclear power and the drive for uranium. This is the most important bit of news, though, that I think, particularly looking at the US, the Department of Energy, a couple of weeks ago, week and a half ago, came out with their liftoff report that said they want to increase from 100 gigawatts a year to 300 gigawatts by 2050. So that means there's a demand, a domestic demand for 50 million pounds now. There's going to be a demand for 150 million pounds just in the US to supply these nuclear reactors. And now, there's been a lot of talk in the past about building a lot of nuclear reactors, but there's a different set of motivations around it now. And I think this is going to become reality. If you look at what China's doing, look at what Japan's doing, Korea is doing, India, I can go on. All of those jurisdictions are very, very serious about building more capacity for nuclear power. So just to summarize the supply-demand situation, you'll see this chart here comes up in pretty much every uranium presentation. There is a massive gap appearing in supply and demand, and it's happening right now, right as we speak. $50 a pound at spot is not the price of uranium. Contracted price is more in the region $60 to $65. The Department of Energy has just bought into the uranium reserve at a range of sort of up to about $64 a pound. So that gives you an idea of what uranium companies are going to require as a minimum. And that's coming out of established companies. That's not coming out of new build companies. New build companies are going to need, I believe, more in the region of $70, $75. There are those who would say it should be $100. So we think the time's right. We think the price is right for uranium production in the US to restart. And that is evidenced by what's been happening. You can see here that Lost Creek, UR Energy's Lost Creek, which is 10 miles away from our Great Divide Basin Thor project, is back in production now. Peninsula Energy at the Lance project in Wyoming, they were due to be back in production now. They've had a slight delay. I think it'll be another quarter or so, but they're back in production. So there's two. They're both ISR producers, and they're both within 50 or 100 miles of our projects. And in the case of Lost Creek, right next door. So Wyoming, what's so special about Wyoming? It's the second largest energy state in the US after Texas. It's about the only place in the world where you can stand on a rehabilitated coal mine under a wind farm next to oil derricks pumping away, and with an in-situ recovery, uranium mine just down the road. So it's the second least populated state in the US. It's one of the larger landmass states. They really understand energy. They understand in-situ recovery mining. It was really pioneered in Wyoming, and there's about 7 current facilities operable there at the moment. So we think it is a really fantastic place to be exploring for and developing a uranium project. One of the defining things about what we're trying to do is in situ recovery mining. So for those of you who don't understand it, it's pretty simple. This chart or this image shows you Rossing in Namibia, typical open cut mine, and then Cameco Smith Ranch, that's the largest in situ recovery mine in Wyoming. And you can see you don't need a spreadsheet to understand why one is better than the other. But when you do put it into a spreadsheet, it also stacks up as being significantly cheaper, up to 60% cheaper in some cases. Sorry, so 60% of global production now is from ISR. Obviously, the Kazakhstan production comes out of ISR. Australia, you've got Honeymoon and Heathgate in South Australia are ISR, and it's also practiced in a lot of other jurisdictions. So simple process of injecting a leach solution plus oxygen and carbon dioxide into the ore zone below the groundwater, and then sucking that back up to the surface or pumping it back to the surface where it's put over an ion exchange plant. Then the uranium comes off the beads through an eluation circuit, and then it's dried and drummed. So it's a very simple and relatively benign process, particularly using an alkaline lixiviant, which is just baking soda. So a little bit about the projects. I've got about 5 minutes left, so it's going to be quick. On the far side, you can see the recent project that we've just bought a data set for, Low Herma. It's about 10 miles away from Cameco's Smith Ranch Highland. And down on the bottom corner, you've got the Green Mountain and the Great Divide projects, which are very close to UR Energy's production plant. One of the defining things about the way uranium's mined in this part of the world is through satellite mining. So there's typically, this is UEC's chart. You'll see their central production plant at Irigaray is where they process the uranium on the beads, but the production sites are actually a lot of the green triangles and the black squares. So it's like a locust mining operation. Our projects, just to give you context, are the ones in red. So we're certainly within the frame of a viable satellite mining type operation where we could, for instance, build a plant at Low Herma and then mine the other units as a satellite. I think the other thing that's probably worth looking at is our near neighbor, UR Energy. They claim to be the lowest cost ISR producer outside Kazakhstan with an OPEX cost of around $16 or $17. We believe there's about $15 worth of CapEx in there. So we think the all-in sustaining cost is around $30 to $35. That's not a publishable figure. That's a back of the envelope calculation. So that's what we're targeting, is something analogous to that, where we can, for a $60 to $65 contracted price, you could be getting $30 a pound free cash. And a £1 million a year plant, that's a pretty substantial income. So one of the things that attracted us to the projects that we have and our approach is, some of the people. So Doug Beam, who's our key engineer and geologist, he's been working in this area since the 70s. They were drilling about 1 million feet a year back in the 70s. And Jim Boffman, who also is an experienced geologist and company director in this area. I don't have time to really talk about our 22 drilling campaign to any great extent, but what I do want to talk about is our Low Herma project. So we recently bought a database for this project, which is 1,400 drill holes, or 1,445. Now we believe that has a replacement value of around $15 million. And that's interesting given our market cap is $17 million at the moment. So you can see here, there's a density of drilling on this project. We're in the process of, we've scanned the logs, we're digitizing the drill logs, we'll have them in a database and have a JORC resource by the end of, well, our target is the end of June, and that's without any drilling. And then so the plan will be for the balance of the year is to do the verification drilling, some hydrology, some disequilibrium holes, and bring the confidence value of that resource up by the end of the year. So this will be a key focus going forward. And what we're looking at here is a target of around 10 million pounds. There's exploration potential here at depth and along strike. When they drilled these projects back in the 70s, they were looking at conventional uranium principally. So they only drilled down to about 300 or 400 feet, 100 meters. So what we can do is probably drop that down to 800, 900, and we know there's layers of sand below that, and we know that Fort Union formation that sits below that is also uranium bearing, because that's what Cameco mines out of. So there's some real potential to expand it, but it's a pretty good start to be able to say we think there may be 10 million pounds there. So just to summarize where we are, this was released yesterday morning. So we do have an inferred resource in the Great Divide Basin. It's modest, it's a good start, but it is only a start. The exploration targets there, we've got the top end of those ranges at in excess of 20 million pounds, and that's really what we're looking at firming up over the next 6, 9, 12, 18 months. And that will drive news going forward for the stock. Look, just to summarize the exploration, I think I've already talked about the low Herma exploration. We'll do some geophysics as well, but essentially we're looking to upgrade that resource from exploration target to a resource. And at Green Mountain, we're going to fly some geophysics so we can tighten up on our drill targeting before drilling that as well. So there's quite a bit there going on. But just to summarize before I'm kicked off the stage, we're in that first stage of defining and drilling a resource. What we're looking for as an outcome is a preliminary economic assessment, or a PFS, and that, you know, we may be in a position to do that early next year. Short summary, we've got, by the time our rights issue is done, we'll have, you know, $4 or $5 million in the bank, which is plenty to get us through this next period of resource upgrade. And there's a bit of a summary of what the news flow will be going forward for the company, and what the achievements, what our achievements are targeted to be. So thanks for your time. The summary is, you know, that the US is really recommitted to nuclear, and we can see that being stronger for longer. We think the uranium price is in the right spot to support the industry being rebooted. We think the projects are in a great place. ISR, we believe, is the lowest cost and least environmentally impactful form of mining, and that's what we're targeting. We've got resources underway, and we're going to improve on those resources in the short term and as we go forward. So look, we think we're priced right. We think there's an opportunity for investors at the moment, and you know, hopefully you guys can see that too. So anybody who's interested, feel free to come and see me on stand 93 after the talk. Thanks for your time.
Thanks, Bruce. I've just got a quick question, Bruce. You say that ISR is the lowest CapEx, lowest OpEx in comparative to hard rock, and you also said the benefits of the environmental aspect. Are you saying that ISR projects have an expedited approvals process to get into production?
Look, I think it's nigh on impossible to generalize. I think every project is so unique that it is difficult to generalize. But look, we think in this jurisdiction, Wyoming's self-determined in terms of permitting. They don't have to go to the federal government to get projects approved. You can see that there's already 7 operating and 2 more permitted. That as a jurisdiction, they're comfortable with the method of mining. It's a very consistent geological setting, so it's well understood. And as long as you've done your baseline monitoring, then that process should be relatively straightforward. And when I say that, I mean, you know, we're looking at maybe a CapEx of somewhere around the $60 or $70 million mark. And, you know, the time to approval, I mean, maybe we could be up and running in 3 or 4 years. You know, it's not a 5 or 10 year proposition, and it's not $500 million worth of CapEx. So that's the difference between this and some of the larger projects that you'll see. Yeah.
Thanks, Bruce.
Thanks very much.
Apologies in advance if I get the name wrong, but please welcome Caedmon Marriott from Western Mines Group, Managing Director. Western Mines Group is exploring the emerging new nickel sulfide discovery in Western Australian Eastern Yilgarn, which is timely given the increased M&A activity in WA's nickel landscape as key players move to secure nickel sulfide resources for their downstream ambitions. Caedmon here is here today to tell us more about their exciting recent results from their ongoing phase 2 diamond drilling program at their Mulga Tank project. Welcome, Caedmon.
Thank you very much. Well, thank you to Resource Connect Asia for the opportunity to present today. This is our standard disclaimer. I'm obviously an optimistic geologist, so I'll be making plenty of forward-looking statements. Western Mines is still a fairly young company. We listed in the middle of 2021, just less than 2 years ago. And we're very much an exploration company. That's our niche, or that's our DNA, at the very forefront of the industry, looking for new supplies and new discoveries to feed this industry thematic of the energy transition. We're very much focused on high impact exploration, particularly for nickel. We have 8 projects all in Western Australia, but of that, certainly the Mulga Tank project is by far our principal focus, which is what I'll be talking to today, where we think we're on the verge of a very significant nickel discovery. We raised about $5.5 million at IPO. We did a very small capital raise just before Christmas to a strategic investor here in Singapore, Quenchi Natural Resources. But we're very frugal with our exploration spend, so we still have cash left in the bank, and we're fully funded for our current drilling program. Very tightly held with 49 million shares on issue, with very good ownership by the directors, myself and our technical director, Dr. Ben Gregruic, who's a well-known WA nickel expert who leads our exploration programs. Now, a lot of people at this conference will have presented charts like this, so there's not much I can add in terms of the supply-demand dynamics for battery metals. But just touching on nickel, which obviously is a key component of the global energy transition, and expanding on our thesis that large, low-grade nickel sulfide will increasingly become a key essential new supply of this. So just looking at supplies of nickel, a lot of nickel comes from nickel laterite. And I don't want to sort of front run maybe some comments that John from Mallee will make later, but nickel laterite is on average about 4 times more energy intensive and CO2 intensive than nickel sulfide. And so what is the point in making these nickel for these EV batteries if the carbon dioxide that goes into producing the nickel, it can't be offset by the life of the battery or the vehicle? So you need to be looking for sulfide sources. And often these little nickel laterites, they're very large, superficial deposits, often in tropical areas, can be very environmentally destructive. So the further source is obviously high-grade massive sulfide, which people are probably very familiar with. These are very high value per ton deposits that can be mined to great depths. They're some of the highest value deposits across all mineral classes. They're kind of the holy grail of exploration, if you like. But perhaps people don't realize is that they can be very hard to find and sort of on size and scale. The major Nova Bollinger discovery over the last 10 or 15 years in WA is an example of this, but it is only about 325,000 tons of contained nickel. So if you want to do anything to meet this supply demand of about 4 times nickel production, that we believe the industry will increasingly move to large, low-grade disseminated nickel sulfide. So these are the largest nickel mines in the world, and Ben makes the analogy of them being the equivalent of copper porphyries. And due to economies of scale, these can be mined to very low grades at still extremely profitably. These large deposits of well over 1 million tons of contained nickel can supply 30, 40,000 tons of nickel a year for multi-decades. And one other benefit of them being the disseminated mineralization can produce a very high-grade concentrate that very amenable for processing. And unique to our potentially to our project, and also a number of Canadians like Canada Nickel make this point as well, that our dunite or our serpentinite spontaneously carbonates at surface and actually absorbs carbon dioxide. So there's a potential for us to be producing net zero carbon nickel. So here, this is where we are. We're in Western Australia, which is a well-known world-class nickel exploration province. There's examples of has this got a pointer or not? There's examples of Kambalda and Widgie down in the south there. And up in the north east corner of that slide is all BHP's nickel exploration through Mount Keith, Yakabindi. And Ben, our director, spent a lot of his early career there, and he's written well over 50 scientific papers on the mineralization at Mount Keith. Whilst he was Geoscience Manager Australia for Norilsk Nickel, he made the West Jordan discovery at the top of that belt there, another very large low-grade system. And so our project at Mulga Tank, it's about 2.5 hours to the east of Kalgoorlie, close to infrastructure. We have benefit from the Tropicana Road going through the project, but we very much call it a frontier exploration play. As you move out this way, you're moving into the Great Victoria Desert. And so the whole of our belt that we've secured here is under 50, 60 meters of sand cover. And therein lies the opportunity. This is where you need to go for new large projects, is often undercover. We think we've demonstrated a very significant working mineral system here that we hope to unlock with modern techniques. So zooming in into our belt, this is a aeromagnetic image. And we think there's a huge system here and a belt scale opportunity. Down at the south here, this round blob, this is a very large accumulate dunite body, a very hot, intrusive body. And then extending up the belt, there's about 12 to 15 kilometers of ultramafic komatiite channel flows. Now, due to that sand cover that I mentioned, historically, the historic drilling, very few holes had penetrated through the sand and had anyway penetrated the bedrock. We've been doing recent drilling as well, but of 25 holes that have significantly intersected the ultramafic here, at least 19 of them contain nickel sulfide mineralization over a very large area of something like 15, 20 square kilometers. So we think this is a very big nickel system and displays all the hallmarks, all the critical elements of it. We know it's a komatiite magma coming up through the crust. It's reached what's called sulfur saturation, which is a very key geochemical component to these systems where sulfides are being precipitated out. And the nickel, copper, PGEs, things like that, preferentially sequester into the sulfide. And so the key last step in this now, and what we're focused on, is where these deposits have formed. And we think there's opportunity here for multiple significant nickel deposits. All right. So we think in terms of those end members that I alluded to, there's sort of two styles of this komatiite hosted nickel we're looking for. One is very analogous to Perseverance, which is called a type 1 basal massive sulfide deposit. This will be, we think, will be found at the base of the intrusion. These can be, again, large, high-grade deposits. Perseverance, 50 million tons at 2% nickel. And then on the right-hand side there is obviously Mount Keith. This is the type 2 interstitial disseminated sulfide mineralization. And there, which I'll just show in the next few slides, there's the approximate kind of aerial footprint of these ore bodies. Perseverance quite small at about 600 by 100. And there's Mount Keith on the other side there. Now, the key thing, as I said, for Mount Keith is you've got to be looking for how much nickel is free nickel in sulfide form. And we think that currently in the industry, something about 0.16, 0.18% is probably the marginal ton that you need to be exploring for. So based on our some of our recent exploration results, this is where we're seeing very good evidence for Mount Keith style mineralized system. 4 of our holes intersected significant intervals of disseminated nickel sulfide, well over 300-meter intervals of this mineralization. And the recent hole that we put out yesterday was hole MTD 023. Whilst drilling the hole, we saw over 600 meters of visible disseminated sulfides. And the recent assay results confirm that these are in fact magmatic nickel sulfides. And cumulatively, we see about 693 meters of mineralization at about 2.8% nickel. Now, this hole, in a way, was a bit lucky. We drilled this with the aid of a government exploration incentive scheme grant, and we very much just targeted the hole in the center of the intrusion. We were drilling this for geology to get a sense of our geological model of this being a large bowl-shaped intrusion, with this hole proved. This is very similar to what BHP attempted, which were one of those 2 historic holes in the center as well. When BHP first drilled this in 1985, they found the aeromag anomaly, went and stuck a hole in the center, but they abandoned their hole at 200 meters because all they found was dunite with disseminated nickel sulfide, and they were looking for an Olympic Dam IOCG at the time. So we went back, and essentially this hole that we've just drilled is what they attempted to do as the very first hole in this intrusion. And we demonstrated in a 1,400-meter hole, there were 1,200 meters of very high MgO dunite. We know this is a very hot dynamic system with very significant mineralization. And this is confirmed in those other holes as well, 22, 12, and 20 down in the southeast corner. And you can see from the size of this body of approximately 5 kilometers long by 4 kilometers, tons aren't going to be a problem here. There's Mount Keith for scale on the left-hand side. We think there's plenty of tons to be found here of this disseminated mineralization. Ben has a lab at home in his garage where he does thin section work for us. And so we see this very nice, coarse, abundant pentlandite in all our drill core that he confirms as being pentlandite. And that's predominantly the sulfide mineral species we see. Now, also in a number of our recent holes, generally towards the base of them, we see lots of examples of this remobilized massive sulfide material. This is now very analogous to that Perseverance style target. We haven't hit the kind of the ore grade widths yet, but this mineralization, the massive sulfide which we think will form at the base of this intrusion, it's very mobile. It's very much like plasticine or toothpaste, and as this body is faulted and fractured, this stuff squirts up through these fractures into these veins, and there's significant evidence for it over quite a large area. And these veins are only 2, 5, 10, maybe 10 centimeters thick. So when we assay them over half a meter or a meter, the numbers don't look that impressive, but we know that this is very high tenor sulfide mineralization. And so the question becomes, where is this all migrating from? Now, the way that we're going to find this is through these deep holes, doing downhole EM to better search that basal contact. So just stepping back slightly, as I mentioned, our exploration is very much led by Ben. We think we're building a very robust exploration model for the discovery of what we think could be multiple significant nickel sulfide deposits here, and very much using a combined data set. We were blessed with quite a large data set from previous explorers when we acquired this project. From the IPO, we did a lot more of our own work, and we embarked last year on our first drilling program where we drilled 10 holes, and we're currently in the middle of our phase 2 program. So during the first phase last year, we drilled 10 holes. We deliberately drilled them quite shallow. We were trying to get as many holes and testing different areas of the intrusion as we could, but pretty successful results. At least 6 out of the 10 holes showed visible nickel sulfide mineralization. And what this was able to do is able to give us a lot better understanding of the system. We embarked on a follow-up program in November last year, drilled till Christmas, had a short break over Christmas, and the guys have been back since mid-January. And now in this one, during that time, back in October, we applied for this exploration incentive scheme grant. This is the WA government will co-fund. They gave us the maximum award of $220,000 to fund up to half of 2 deep holes. This is the kind of deep, expensive drilling that, as I alluded to, that BHP embarked on, but a junior company like us wouldn't normally afford or look to do. And so we're going to drill those 2 deep holes, 23 that we've already drilled in the center, and we have EIS2 that we will also look to drill. And then following that, we'll drill 22, 24. We're currently drilling P25 there in pink. And then following that one, we'll step over to P24, which is deliberately positioned halfway between 23 and 20. Both of those show significant intersections of the disseminated mineralization, and we will look to link that up. And so just being conscious of recoverability and the potential profitability of these very large low-grade systems, we recently conducted some Aqua Regia test work. This is comparing Aqua Regia digest with more aggressive 4-acid. And this is it's a semi-quantitative comparison technique. Ben certainly doesn't like me using the words recoverability or liberation or things like that, but it does give a strong indication of that the nickel is very much here hosted in sulfide versus silicate nickel, which would be unrecoverable. We deliberately selected 3 intersections, shallow intersections from holes 12, 22, and 23. This is over about 1.6 kilometers. There's a pretty consistent zone within the top 200 meters of about 80 meters thick where we see this mineralization. And you can see the results there that across all these holes, there's sort of better than 97% similarity in the results, which is alluding to the fact that we think most of the nickel is in sulfide, which again is what was confirmed by our mineralogical results and our assay results as well. And if you look in particular in things like hole 22 there, at the base of the mineralization, we see this upkick in the grade there, and there's a much nice juicier intersection there of about 15 meters at close to 0.5%, running up to 0.7. We certainly don't think that any of these holes that we've drilled are the highest grade mineralization yet. Things like that will enable us to vector into potentially where those higher grade portions thicken. But having said that, all of these are well in the high 2.6, 2.8s to over 3s. So we think these are certainly payable and recoverable. Just very quickly, everyone wants to know what you're doing next. We sort of see multiple parallel pathways. We're certainly going to be focused on extending sort of the area that's disseminated mineralization, the Mount Keith style. In parallel to that, we'll be doing beneficiation test work. Once we've confirmed that we can get a payable nickel sulfide mineralization, then we'll very aggressively embark on a resource drill out. We'll continue targeting the basal massive sulfide. That's the Perseverance style target. We're still waiting on the grant of the northern tenement. When that happens, there'll be belt-wide geophysics, and then we can very much get into the very first drilling, targeting these extensive Cambalda style channels. And in the background, whilst the rest of the guys are working on that, I'm sort of been proving up some of our lithium and gold exploration. So there will be some potential news flow on that as well. And so just to summarize, perhaps our company philosophy, if you like, we think there are multiple deposits to be found here. We always strive to do very high quality technical work. We're very frugal with our overheads, except for the celebration we had last night on our assay results. We want to change shareholders' lives, and we think we offer a very compelling risk reward and very leverage to exploration success. Thank you very much.
Thanks, Gab. It definitely seems like you're onto something there. Next up, last but not least, please welcome John Lamb, Managing Director of Mallee Resources, to close out the opening session here today at Auditorium 2. As the world continues to transition towards electrification of industry and battery storage, high quality nickel assets with strong ESG credentials are becoming increasingly hard to find. Mallee Resources, with its operating Avebury nickel mine in Tasmania, Australia, is well positioned to supply the increasing demand for sustainably sourced nickel sulfides. Look forward to hearing from John about how things are progressing at Avebury since acquiring and recommissioning the mine last year.
Thanks for the introduction, and good morning, ladies and gentlemen. I'm going to start with a question. When you think of future-facing commodities like me, I'm sure you think of lithium, nickel, cobalt, perhaps tin, tungsten, graphite, all of which go into our batteries and our power systems to electrify and energize our world without burning fossil fuels. But do you think of where they come from, or merely where they go? Ladies and gentlemen, welcome to Mallee Resources, Australia's newest producer of nickel and cobalt, and welcome to Avebury, the mine that will reset the bar for critical minerals production globally. It's in Tasmania, Australia's green state, and the home of all things clean, green, clever and beautiful. And to help you get your bearings, you can see on the image there, we're about 7 kilometres inland from the west coast of Tasmania, and if you look just below the logo, you'll see the sea. That's the Great Southern Ocean. It is a beautiful and wild place, and we intend to keep it that way. You're looking at the only producer of sulfide nickel and cobalt in the world that is located in a Tier 1 jurisdiction and powered by renewables. Today, ladies and gentlemen, I ask you to consider where our future-facing mineral commodities come from, how we extract them, and what is really important in that process. Now, the case for Avebury is utterly compelling. JORC 2012 resource of over 250,000 tonnes of nickel in the ground, open in all directions, and not just any nickel, nickel sulfide pentlandite, class 1 nickel. It's the nickel that is used to make cathodes in batteries. We're located in one of the most stable, well-regulated, well-serviced mining jurisdictions in the world. You can see on the map there about 140 kilometres by road and rail from the port of Burnie. That's a deep water port with a dedicated minerals handling facility. We have a bitumen road to the door of the mine. We have grid power to the gate. We have the town of Zeehan nearby where people live and go about their lives. And so we're in a fantastic location, and most importantly, we are in production. We're successfully exporting nickel cobalt concentrate around the world, thanks to the efforts of our wonderful team. And we're already low carbon, thanks to Tasmania's green grid power, which is comprised of hydroelectric and wind power. And we have a realistic plan to get all the way down to zero carbon nickel and cobalt at the mine gate. And I'd suggest to you that there are very few nickel producers in the world that could say that. Corporately, we're fairly simple. 415 million shares on issue, modest debt on an asset of this quality, and you can pretty easily calculate an enterprise value at our pre-IPO price of 42 cents a share. And if you do that, It works out at $728 per tonne of nickel contained in the JORC resource. And I can tell you that is a small fraction of the value ascribed by the market to other peer projects, which suggests a substantial value upside compared to our current notional market cap. Shareholding's fairly simple, about 1/3 Hartree, other large holders a little less than 1/3, and retail a little more than 1/3, but in total about 3,500 individual shareholders. We've had a number of large private investors join just in recent months. Now, these are people who, despite the fact that we're not listed, don't want to miss out. They believe in nickel, they believe in decarbonisation, and they have decided to take a stake in our company, and we've welcomed them very much. As far as the board goes, just 3 directors plus Ross, our CFO, and we plan to add another 2 independent directors in the coming months to make sure that the board committees can function as we need them to do. And here's the one-page snapshot of our Tasmanian assets. 2 tenement packages, the one close to the coast there containing Avebury and the prospective ultramafic rocks that run all the way out to the sea. And then the other one about 20 kilometres away at Melba, which hosts a very large anomaly and a whole lot of historical workings at quite high grade. And in the middle, the town of Zeehan, as I mentioned. And at Avebury, a fully developed mine, nameplate capacity of 900,000 tonnes per annum, but our plan is to take that up to 1.2 million once we've bedded in nameplate. And as I said, we're in production. We started in October last year, and I guess to update the figure that you see on the slide there, we've now produced over 10,000 tonnes of concentrate containing over 2,000 tonnes of nickel, and happily sold that out into the world. So we're very happy about that. We booked receipts in our first quarter of $29 million. We have a crew of actually pretty close to 200 people these days on site. So this is real, it is happening, it is in production. It's not a managing director's story, and it's not a geologist's folly. And it's big. Not BHP big, but bigger than everyone else big. This chart is really interesting. It shows Australia's current nickel sulfide producers, so not all the projects that are coming online, but the ones that are in production, ranked by JORC resource size. And this is before the geologists have had a go at it. We drilled our first grade control holes in February, and they were the first drill holes at Avebury in 14 years. We're mobilising a second rig right now. We'll start some resource holes, so watch this space. We're about to publish a new resource statement pretty shortly, and that will be accompanied by the first ore reserve that we've issued on this site, and that'll be the first one for Avebury in over a decade. Once that happens, we'll begin to paint our picture of the future that we see at Avebury. But the message is already very clear. If you want exposure to Australian nickel sulfide production from a project of nationally significant scale, before the secret gets out, this is it. Very briefly, an overview of the operations. Geology team, as I said, they're flying, super talented, drilling and working on the resource model. Mining is boosted by large stopes, high tonnes per vertical metre, very close to surface. This is a very shallow mine, short haul distances, short cycle time. And I'm happy to report that the mine delivered its first nameplate month. 80,000 tonnes was put on the ROM pad in the month of March, just closed, which is pretty exciting. The plant and the team are just brilliant. They've commissioned the plant and debottlenecked to nameplate capacity. It now runs more ore than ever before at higher recoveries than ever before. Outbound logistics is fairly straightforward. We truck it to Burnie. You can see the truck being loaded there in the image. We bag it and we store it. And when the customer orders come in, we load the bags into containers and we ship them out. The offtake is flexible with good payability. As I said, we've passed 10,000 tonnes of concentrate now sold under that agreement and off in customers' hands around the world. And the concentrate grade is settling around 20% nickel, which is pretty phenomenal. I'm pretty happy about that. And not only is the resource big, but we're making it bigger. This graphic shows the immediate upside that exists in and around the current resource. Now, I don't have the drill holes turned on in this view, but if I did, you'd see that the resource tracks the drilling. Heavily drilled in the middle where the mine workings are, sparsely drilled on the edges and not drilled at all below about 400 metres. And the yellow zones there are not guesses. They have holes in them already and the geology is confirmed, but it's too sparsely drilled in our view to call it resource yet. We're looking for greater density. But you can see the obvious gaps there between the existing drill fences. It's really just a matter of filling those gaps. Those ones right there. It's pretty obvious where to drill. And in so doing, add to the resource in fairly short order. And of course, this whole thing is open at depth. It was drilled from the surface to about 400, 450 meters. They found the shallow mineralization and then hooked into getting that ready for production and never drilled any deeper. So I couldn't tell you how big Avebury is going to be, but I can tell you there's an awful lot of running room. Regionally, we're exploring as well. So from Avebury heading out towards the coast, you have this arc of ultramafic rocks where the edge of those rocks have the granite, the Heemskirk granite sitting underneath. And you see it sort of coincides with that jumbled up set of magnetic anomalies. That is where we're looking for more Aveburys. Only 12% of that entire zone has been tested and it produced the Avebury deposit. So we've got plenty of work to do there and we're very, very hopeful. And over at Melba, you can see we have a couple of leases up there, a large anomaly. The ultramafic rocks are there too, but that's not where the ore is. And I say ore because there were a series of about a dozen historical mines prior to the 1960s produced nickel at 3 to 5%, copper, gold, PGEs, hosted in the gabbro, not in the ultramafic. Looks like a magmatic source. The question is, where did it come from? So we'll be doing a gravity survey a little bit later this year to tell us what's underneath and tell us where to drill, but I'm pretty excited about that one as well. So we've established that Avebury is big, productive, and with scope to expand. It's also green. Thanks to Tasmania's 100% renewable power generation, wind and hydro, Avebury is already amongst the world's lowest carbon nickel, which matters, of course, because Avebury's nickel concentrate is that relatively rare sulfide containing cobalt, as it happens, in about the right proportion to go into a battery. And so the carbon footprint matters in a world that seeks nickel to electrify and decarbonize. And if you're trying to scale off the graph where we sit, I'll help you out. It's 1.9 tonnes of CO2 per tonne of nickel. That's the height of that little yellow bar there that's Avebury. And you can see in comparison to the other forms of class 1 nickel, how good we are. Avebury, of course, has a plan to go all the way to zero carbon nickel. Because of the geometry of the ore body, existing electric machines from existing manufacturers will operate on our mine. We can take it all the way down to zero at the mine gate. And I don't know of another nickel producer, as I say, that could say that. And I'll spare you the lecture, ladies and gentlemen, on how much battery grade nickel the world needs and how we're so desperate that we're prepared to burn millions of tonnes of coal to make nickel laterites into matte and then into sulfates for batteries. I'll spare you that lecture. Better by far to start with nickel sulfide of the lowest carbon intensity you can find. So there's really just one key message for me in this whole nickel sulfide thing, and it's really clear. The world is decarbonising and we're not stepping back from that. It needs battery grade class 1 nickel to do that, and there isn't enough. It is as simple as that. Avebury produces low carbon, ethical, conflict-free battery grade nickel and cobalt. I urge you, ladies and gentlemen, to ask the question, where did the nickel and cobalt in your EV battery come from? How was it made? How was it extracted? How much carbon was produced along the way? Ask that question. You might be surprised by the answer. As far as news flow goes, very busy agenda this year. Right now, we're working on our resources and reserves, as I said, and I'm super excited for that. And I'm just itching to turn the plant up to nameplate. Not quite there, but nearly. Those things are very, very short term. We've pledged to our shareholders that we will list this year. Now, it's a bit tricky picking a spot between American and Swiss bank crises, but we'll get there. And in the meantime, of course, there's plenty to do. We're working on our first ever ESG report. You'll see that later in the year. That will substantiate our green credentials. We'll produce our 1.2 million tonne expansion plan, and you'll begin to see exploration results later in the year as well. And by Christmas, we'll be bigger and our shareholders will be very happy. Speaking of ESG, we're deeply entrenched in this as a business ethos. Avebury has a lot of natural advantages. People tell me it's the cleanest mine they have ever been to. It looks well cared for. The footprint is small, environmental impacts are well managed, the water is naturally alkaline, and our tailings are non-acid forming. We even capture rainwater from the buildings for drinking. We recycle and repurpose where we can. Every skerrick of waste rock goes underground as fill. By the middle of next year, we'll be bringing our paste plant online, and that will put our tailings underground as well. We've invested in technology to quantify our energy use and our carbon emissions, and we've committed to reducing both of those. On the community side, engaged and supportive, we're in everything we can be in, we're generous and we're committed. Look out for our ESG report that'll transparently demonstrate our credentials. And as I said at the start, this mine resets the bar for critical minerals globally. This mine meets modern community expectations for what a critical minerals mine should be like. It is a shining example, it's a disruptor, and we love it. I'm conscious of the fact that I stand between you and a cup of tea, I'll sum up. New, large, de-risked mine that is producing, and it's producing class 1 nickel with cobalt from a fantastic location in a tier 1 jurisdiction. We have a great team, value accretive events on the horizon, an expansion plan in train, a large resource, huge potential to grow, genuine ESG credentials, and already low carbon intensity, and a plan to reach net zero. Ladies and gentlemen, there is only one of these. Thank you.
Thanks, John. Good presentation. Well, that's all the presentations that we have for the opening session here today in Auditorium 2. So thank you all for tuning in, and most of all, thank you to the presenters. Please don't hesitate to catch our presenters hovering around the respective booths if you want to have a chat and a bit more detail on their stories. Thank you.